We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about things to look for at a market top and things to look for at a market bottom. At a market bottom, we want to recognize buying into a downswing. At a market top, we want to recognize selling into an upswing. That's when the big boys want to use a major move in the market to change their portfolios against the view at the time, or the narrative at the time. Generally speaking, markets we move 10, 15, 20% quite easily on a narrative, and whereas the underlying, or say the informed money, will either sell into a rally or buy into a sell-off. Let's have a look at times where this has possibly happened. Okay, here we have the S&P 500, and we can I'll state some obvious ones. The situation here, we had a sell-off down here, and this next sell-off was used to buy into. It was a triple bottom, and there was some divergence involved. So that was at a bottom. At the top here, just after the Bear Stearns, we got a top, but that rally there was used to sell into. And we got a big move down. The Fed started providing support to the rally, to the sell-off, sorry, to the market. We've got another sell-off here that was used to buy into. Now these are normally highlighted, as a fake rally. You might describe them in the Elliott wave as the fifth wave that doesn't do very well, or in Richard Wyckoff he may refer to it as a terminal shakeout or some sort of downward support. Spring action coming in there, up here to be up thrust after distribution. So we've got to watch out now. For example, we've just had a big solid move, and now we're most likely going to get a rally post-election of some size, where we must watch how well the growth stocks do. That's the Apples, Amazons, Facebooks and Googles and what have you. If they don't perform as well as everything else, because when we have this next rally, you'll probably find all the junk rallies as well. And the next rally could be used to lighten up loads in growth stocks, which is obviously stocks that don't show any dividend and very little profit. And that move could happen now as we come out of the US elections into Christmas, and probably with some stimulus, so probably carry over to January, February, March. So as happened before, you get that last little move. That is a move to adjust portfolios, with the smart money does it. And we're going to have to watch and see what happens. There's some portfolio adjustments here. There was pre-election, and obviously the 2016 election was there, and it was just takeoff. There's some portfolio adjustments here. There's a situation here where we had a light rally, and there was some selling to that, I know for sure, because there was a new high, the S&P 500 here, and there was no new high in the NYSE margin. That means people were lighting the load in their portfolios and using that to sell into. Right? And obviously the government is just, the Fed's pushed this up. So, but now, after the elections, we're most likely get a substantial rally. But this time, we're going into the stratosphere, and we're going to where there's no oxygen. And I wouldn't be surprised if people suddenly realise we've got to take some profits on these crazy PEs, these crazy prices, and it's going to be very evident. So you have to watch for, as we have done in previous pasts, selling into the sort of last rally after realising the narrative might change. And the narrative might be changing is that negative interest rates may not be allowed in the States, so we might get a new low in bonds. It would be the lowest bond. So if the bonds go from 0.25, whatever they are now, to 0.10 or 0.05, that'll be the low, and you realise there's not going to be a negative rate, so that people will have to unwind their positions. So the bond market might be the catalyst for the top, but the most important thing now is to watch for how the rally is used to lighten loads in major performing growth stocks. Very much like what happened in the Nasdaq in 2000. We had this massive rally up, and it peaked out around about March 2000 because it was a big pump up to sell into. I'm expecting some sort of blow off top now to attract the public in and to allow the big boys to start releasing some stocks into that rally. Thanks for watching.